The shares of global mega players like Apple, Microsoft, and Tesla gave whopping returns in 2021. That's no mean feat at a time when every nation and its respective economy have been reeling from the pandemic. The S&P 500 index gave about 27% returns in 2021, while the S&P TSX Composite Index, which tracks large-cap companies listed in Canada, gave nearly 22% in returns, its best in 12 years. But with the incessant waves of COVID variants and cases, investors have to wonder how will it affect the equity market in 2022. Hey, and thanks for tuning in. Holly Shields here for Kalkine Media. First of all, it's important to note that the rise of retail investors across the globe, from the US to Canada, fueled the equity market rally. Thanks to online zero-commission brokerages like Robinhood and BitBuy, a small investor with just a few dollars can invest in stocks. And these few dollars make a handsome amount of money in the overall market. So, COVID or no COVID, the retail investor class is bullish on stocks, and when they learn about the gains of the S&P 500 and TSX Composite plus individual stocks, they tend to only increase their bets. Second, several governments are doing all they can to infuse liquidity into the economy by policy actions like the CARES Act and the CEWS. Plus, central banks have supported them by keeping policy rates low to encourage borrowing and spending. There's a reason why the housing markets in all economies, including Canada, are so hot. Low mortgage rates and pandemic savings. So, can a rate hike dent sentiments? Well, there might be a slight correction in the market, but in the broader perspective, the resurgence of COVID and sporadic lockdowns here and there may not upset the market. One, there is enough liquidity in the stock market thanks to the retail investor rush, and two, rate hikes, even if they come, would not be steep enough to dent investors' interest. Another thing to remember is that it's important to understand not all sectors rise or fall or have movements in the same proportion at any given time. The returns of even large cap companies can be in the negative territory over a given period. But all in all, considering the current trends and the way the global stock market quickly regained from the sudden pandemic shock in early 2020, our long-term outlook is optimistic. Now that you're up to speed, check out some of our other videos to stay up to date. I'm Holly Shields for Kalkine Media.